Hello and welcome to the latest episode of Zach's Tech Talk Tuesday. My name is Ryan McQueeney, and today we will be taking a brief look at three upcoming tech earnings reports from a nice little diverse group of companies set to announce their latest quarterly financial results this very week. It's three, so at least one of these needs no introduction. A couple different trendy stocks maybe to look at as well. Very, very busy week of tech earnings reports this week. Really got the ball rolling last week with a ton of tech-focused reports. Of course, Alphabet and Amazon largely impressed, notching impressive revenue growth and earnings, which came in well ahead of expectations. However, towards the latter half of the week, Facebook posted a rare double miss and subsequently witnessed a historically bad day of trading on Thursday. Shares were down again on Friday and on Monday. It's really entered into that bear market territory for Facebook. We also saw a huge sell-off from Twitter on Friday as well after a disappointing report there, or what investors interpreted as a disappointing report from Twitter. So that's kind of really put a damper on the mood here in Q2 earnings season for the technology sector. However, growth, based on what we've seen already and estimates for the remainder of the quarter or the Q2 earnings season, growth is really expected to finish off pretty solidly. We're expecting the final figures to show solid, robust earnings growth throughout the technology sector. And really, I think it's important to talk about these reports for tech because this sector remains an important battleground for bullish investors as these secular growth trends are still driving innovation and demand, but could be easily outshadowed or overshadowed by external forces such as that big scary trade war looming above everyone. So I think tech is the perfect example of really what's going on in the broader market right now. We've got these secular growth trends, as I said, that are really fueling new demand, which means really revenue growth. And it's had a strong past few years. And if we were just concerned about the growth trends themselves, we'd say, well, this has a lot left. This has a lot of time left in this. I mean, these secular trends like AI and machine learning, self-driving cars, that stuff is really just starting to pick up right now. Internet of Things, another great example. It still feels like we're on the uptrend end of the bell curve there, and still have a lot of room to grow here. However, there's this larger external force, this international trade war with these tariffs. That really could weigh on the entire broader market, but on the tech side of things, we're clashing over intellectual property reform, which we're potentially slapping tariffs on chips and other tech imports and exports, and really just putting a big damper on the earnings and revenue growth. So I think tech's a really important battleground, and that's why I think these three reports I'm going to mention on today's episode, but also earnings season in general is such an important period for tech right now. So I'll kick things off today with Apple, which is slated to announce its latest quarterly financial results after the closing bell today, the day that you are listening to this, Tuesday, July 31st. Apple investors, of course, are going to be hoping that a solid report is enough of a catalyst to push the company above that $1 trillion market cap threshold. And if the stock's recent estimate trends and Zach's rank number 2 buy are any indication, we might just be in store for that historic achievement. Apple's consensus earnings estimate for the soon-to-be reported quarter has ticked 8 cents higher over the duration of this very quarter. And now analysts expect the iPhone maker to see adjusted profits of $2.19 per share, which would represent year-over-year growth of 31%. Meanwhile, quarterly revenue is expected to be $52.4 billion, up 15% from the prior year quarter. Still blows my mind that a company who has been which has been dominating for as long as Apple has been dominating is still seeing 15% revenue growth. Going back to what I said about these trends and really just the health of the tech sector, kind of helps underscore that argument that I'm making. Say what you want about every other thing that you could. 15% revenue growth from the likes of Apple is really impressive. Kind of moving from a longtime leader to a recent leader of tech stocks and a recent popular trendy stock, Square. Square's latest results are due out before the bell on August 1st. That would be Wednesday morning. The Jack Dorsey-led company has topped the Zacks consensus estimate for earnings in each of the trailing 4 quarters, posting an average beat of nearly 13%, topping these estimates and topping them handily recently. So Square going to be looking to continue that trend. I mean, even as recently as last quarter, posted an earnings surprise of 20% when adjusted earnings came in at 6 cents per share. That was up 20% on a year-over-year basis and above the company's own guided range of 3 to 5 cents per share. Square has issued a revision to its guidance for the second quarter as well, raising its outlook for total net revenues and adjusted revenues. Now, the company is expecting total net revenues to be between $744 million and $764 million for the soon-to-be reported quarter, which is up from earlier guidance of $740 to $760 million. So raising the high end and the low end there by $4 million. Not bad. A solid raise to the guidance, getting people even more excited about Square over the duration of the quarter. Looking at our consensus estimates, we're looking for gross payment volume for the second quarter to come in at $21.4 billion. Really exhibits shocking growth there. That would represent GPV growth of 30.5% when compared to the year ago period. One talking point that's definitely going to get brought up here is Bitcoin revenue, cryptocurrency revenue. Square entered this market earlier this year. You can now buy and sell Bitcoin on the Cash App, which is Square's big mobile application. Generated $34 million in revenue in the most recently reported quarter. So that's not nothing, and really was helpful for overall revenue growth driver. Had you stripped out Bitcoin revenues, net revenues would have been up just 35%. That's still pretty solid, but that's compared to an actual of nearly 45%. So definitely was a key growth catalyst there. So Square, one to watch again. That's on Wednesday morning. And then we'll have a video game giant Activision Blizzard coming in after the market closes on August 2nd. Shares of ATVI had been gaining in the previous month, but the previous week was really a tough stretch for the stock as tech stocks really took a hit sector-wide, as I mentioned. And Activision Blizzard felt the effects of some maybe disappointing results from others in its industry, and maybe some even more hesitation for a very, very popular game in this industry, which we'll get to in a second. I just want to look at the main consensus estimates, though, right now. Analysts expecting Activision Blizzard to report earnings of 36 cents per share and revenue of $1.4 billion. That would be a year-over-year decline of 35% and 1%, respectively. Of course, we always have to remind ourselves with video game releases that the not oftentimes year-over-year comparable release schedules of games kind of throw off these results. So that's one thing to keep in mind. Sometimes year-over-year is not the simple and easy way to track growth for these companies, and they have these longer term release schedules that you want to compare results to. But Activision Blizzard, we're still really talking about well-known franchises like Call of Duty, which will continue to feel top line results. More recently, we're benefiting from Activision Blizzard is benefiting from its presence in the lucrative esports market. We'll remember that they launched the Overwatch League recently. It's driving viewership and engagement, so it's actually going pretty well from an outsider's perspective. I'm not entirely sure what Activision Blizzard's method of fully capitalizing on and making an earnings growth driver is, but, driving attention, building the brand, building revenue, it's an interesting thing to track, especially in the long term. However, when we talk about an overdependence of franchises, that could be a key problem for Activision Blizzard. So are we leaning too heavily on Call of Duty? Are we leaning too heavily on things like the Overwatch League and Overwatch as a brand? Could quite possibly be the case. And then, as I hinted at earlier, growing popularity of Epic Games as Fortnite is potentially a concern as people are fleeing from existing shooter leaders like Call of Duty into Fortnite. Could that have a hit on something like digital sales? Are we engaging less with Call of Duty as a game? Maybe so. All right, those are the three I wanted to look at today. Again, Apple, Square, Activision Blizzard, a lot of reports coming in this week from tech and elsewhere. So keep your eyes on it, or keep your head on a swivel as we look at what the market is going to be reacting to. That does it for us this week. As a reminder, if you feel that we missed something, or if you want us to cover a different story, just shoot me an email at podcast@zax.com. Make sure to check out all of our other audio content at zax.com/podcasts. And remember to subscribe and leave us a rating on iTunes. Also available on Spotify now. Search Zax Investment Research there. You'll find all of our shows. Thank you so much for listening to the Zax Tech Talk Tuesday podcast. We'll see you next time.